Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are numerous. So in this video, I'm going to be going over my weekly trading plan for the week starting on Monday, August 5th. I'm recording this on Saturday, August 3rd, to share my trading plan with you guys before the market opens on Monday. And by you guys, I mean members of the channel. This is open for members. It costs 99 cents a month to become a member of the channel. And if you're not a member, this will become available to you on Friday, August 9th, after the market closes. So, I think it's a great thing to become a member of the channel to get some, more in-depth perspective, my thoughts on some stocks. And the stocks that I'll be going over in this video are listed right here. And some of them, a lot of them, I will also be going over some unusual options activity that I have looked into on unusual whales. For the month of August, I'm trying out unusual whales, diving into the tickers of interest to see if either there's bullish or bearish sentiment, bearish moves happening, bullish moves happening, so I can have an edge, and I'm trying to share that with you guys so you can have an edge. So, if you're interested in this kind of content, make sure you become a member. 99 cents a month, very cheap, very much worth it, much wow. So yeah, let's get into the tickers here. And so, yeah, I'm just going to switch over to this other list that I have here. It's a little more in depth. And, this is the stuff that I've noted from Unusual Whales over here. So I'm pretty excited to be getting into that. And one thing that I will note, I'm just going to start by getting this out of the way. I was holding an American Airlines call, $10 strike. I could have closed it on Thursday before Jerome Powell started speaking for about $100. But I, was hoping it would go up to my break even, which is around 200. I held it rather than rolling it for another week or two. I'm just, piling money into it at this point. I just decided to cut it and, accepted the loss. And so, it was a loss about $200, but it was a good lesson for me in not just buying a call because I felt like price would be bouncing and finding support. And that's kind of why I wanted to look into unusual whales, because I wanted to get some of the, background of the unusual whales options activity, the flow, and see if that could inform me better for, making money on calls and puts rather than losing money on them. And so there are some that, I plan to partake in this week or over the course of the next month, likely just trimming for, 20% profit, trying to be disciplined about that. Or if they're pretty cheap, getting two contracts and pulling the plug on one once it, 2x's, something like that. And if it doesn't, maybe then just trying to take 20%. And so my goal is to be making at least $40 a month from options, because then that would pay for unusual whales and, because I'd like to continue to give you guys that kind of content. But anyways, enough of that stuff. I'm going to dive into the charts here, or really get into this table and going over, my moves from last week. I'm just going to zoom in on this so you guys can see it a little bit better. And let's see, I'll zoom in a little bit more, and I'm just gonna adjust this frame. Sorry, it's a little, oops, I'm a little wonky with it. It's not wonky, I'm wonky. Okay, so maybe I want to, sorry about this, just, fumbling with, the images and stuff. But, as you can see, AMC is at the top of the list for covered calls. It's also at the top of the list for additions. And so I have a ton of AMC shares, but my share count is not divisible by 100. I like to have positions divisible by 100 shares so I can sell covered calls, just making a little bit of money on the bags that I hold, or, just to kind of, force exits without getting emotional about the, price, because, we can never time or predict the top exactly. And so, selling covered calls helps me with that, or at least theoretically it does. So I enjoy doing those. And so anyways, with with AMC, I think it would actually be getting me up to divisible by 100 shares if I did 26 shares, but I actually want to leave some cash on the side for exploring, options this week, because I think that, I should be able to swing for, 20% profit on some of these that look clear, also with earnings coming up for a lot of these companies. So I don't want to be throwing all my money into AMC or, ChargePoint. I'll get to that in a minute. And so with AMC, like I said, 26 would get me to divisible by 100, but I'm just doing 6 shares, and then, I can reevaluate if price does dip down to 475. And so the reason why I think price could be coming down to 475, the video that I just put out, it's got Wolverine on the front of it. That video, I talked about this blue Fibonacci retracement and the 786 here being at 473.3. Maybe it doesn't hit 473 exactly, and so that's why I have this order placed. That's why it's in yellow at 475. And so, hopefully that fills. And if it does, then I would reevaluate and maybe buy another, maybe 5, 10, or, getting that share count up to divisible by 100, but just see how it goes. And so I should note before I forget, from the previous week, I had AMC buy order at 503, and that was filled. But then every single day that the price closed below my average, which is right around $10, I just add another share right around the closing price for the day. So, I accumulate about 4 or 5 additional shares each week, regardless of this level being hit. And so, yeah, I feel pretty good about that. I would like to get more at 475, but like I said, I just want to keep my options open for, exploring options and unusual whales activity. And so with that being said, I did notice, and so I guess I will explain these kind of like icons or the emojis that are behind the options over here. And so, this is the whale emoji. It's a little pixelated because it's a screenshot. But, so that whale emoji, these are all, from unusual whales. And the magnifying glass is something that I searched. I did not get an alert. Whereas with Palantir, I got an alert. Same with Rivian. And so this one that I searched for has the expiration of June 20th, and the strike price, I believe it was 2 contracts with strikes of $6 and $7 a share. And so that's something that I'm just going to be watching, just looking at. That's why I got the eye emoji there. And the average fill price for those orders was 40 cents and 25 cents. And while you might think because this is a call, it's actually a bearish order, and that's because, and so my understanding of this, I'm getting more and more used to unusual whales, is so if you have an ask, that is a buy. And with options, I've been familiar with this from playing around with options in the past, but if you buy a contract, you're going to get a fill that might be a little bit higher than if you were to sell a contract that at the bid price that would be a little bit lower. And so these calls, as far as I understand this, are bearish because they were filled on the bid side, which, is not necessarily confirmation, but it suggests that they were sell orders. So when price is dipping to, $5 and the lower, somebody was selling these covered calls on the 2nd. I believe most of these orders are on, Friday. And so, that would be August 2nd, but not all of them are. That's something that I will pay closer attention to in future weeks. But for these orders, they were either placed on the 1st or 2nd of August. And so because these were sells, that's saying that this person that placed this order, that they're expecting it to continue to go down. And so if we look at the, let's see, the options table for AMC for, sorry, if I said June, I meant September. It's crazy how time flies and it's already, August now. So I meant September. And so if we, look over at the options table here, and I'm just going to pull up the monthly contracts for September 20th. And these are puts. So I'm going to switch back over to calls, September 20th here. And that is for the $6 and $7 strike, 40 and 25 cents. So $6 is 37 cents. So, it was a good move to sell at 40 cents. It's already come down. And then 25 cents, come down 1 penny. So that's, saving $1 per contract. And I also should note that all of these contracts are based on premiums of over $1,000. So they're larger orders. They're not individual contracts. So they're, whale orders. And I will go over in individual videos or during the unusual whale watching streams, I will go over how I identify, how I search for this unusual whale activity. And so anyways, this is suggesting, that price will be going down between now and the end of September. But, it's not necessarily suggesting that it will go down until this expiration. That's just giving this person, that amount of time to allow for, wiggle room. And so with that being said, with this, as far as I understand it, being a bearish play, I think that this order at 475 is likely to be filled, and then I will be able to add more either lower than 475 or at least lower than $5 a share, and then just getting my average share count of AMC up to be divisible by 100. So, those are my thoughts on AMC as far as the stocks and, options from, unusual whales, but also I wanted to talk about covered calls. And so first, before I go into this week's orders that I have placed up there right now, I did want to go over last week's orders. So I did place a number of AMC covered call orders. A couple of them expired yesterday, so on August 2nd. So I get these 100 shares back on Monday, so that's great. And these other ones that, expire this coming Friday, August 9th, maybe it's a little risky because the strike is $10, but that's about my average. My average is right around, it's to the fraction of a penny, $10 is my average. So, if I ended up getting rid of these shares at $10 a share, it wouldn't be the end of the world. I wouldn't be selling them at a loss, but I don't think that AMC is going to be going up that high, at least not this week, so I feel fine about that. And then I do have one contract that I sold with the expiration of August 16th. And so from these, we can see I made 1, 2, 3, 4, 5, 9, and it looks like $14 just about from selling AMC covered calls. So, not too bad there. And, all of these strikes are above or at my average. So there's no real risk to me there. But then for this upcoming week, I do have, I believe, 400 shares in my account right now that I can sell covered calls on. That's why I placed these orders. But then I should be getting about 500 shares back after the expiration of the contracts from here and prior weeks that expired on August 2nd. And so for the shares that I do have now, I'm just placing 2 orders to sell covered calls with a strike of $10 a share, just at this limit order. I guess I can go over this in the table. So for the expiration of August 9th and 16th, strikes of $10 a share. And from that, I'll make, about $12. So not too bad there. And so if I look over at the options table for, let's see, the 9th, we can see $10 strike up there. The ask price is $3, but because I'm trying to sell covered calls, I would be selling them at the bid price, and that is 2 cents, which translates to $2 per contract. And so that's why I have that limit order placed there, just so they should fill when the market opens. And then after Monday, I can kind of assess, are things looking a little bit more bullish or bearish, and I can adjust other covered calls that I might be selling later in the week. But to start the week, I've just got these 2 contracts, and I'll also show the example for the expiration of August 16th, so the following week. We can see that the $10 strike, the bid price or the sell price is 4 cents, translates to $4 per contract. So that's what I have here, would yield $8 for those 2 contracts. And actually, one thing that I did mess up here, I should adjust the fee that I have using Webull is let's see, 7 cents per one contract. But if I do two contracts like I am here with those 200 shares, it's actually 11 cents. So like this is 389. This one here should actually be 789. So it's a little bit of a typo, but I'll adjust that later. And so, that's what I'm doing with AMC. Now, I will also go over Biora, but I'm not doing too much with that stock as far as buying more shares. It does look like, it is testing this level here, this golden pocket that is ranging from about 58.5, yeah, it's right around 58.5 cents. It's interesting, the 65 and 618 are, at the exact same, to the fraction of a penny price. So that's kind of odd. Anyways, I could be dip buying them, but I'm just not worrying about it too much because maybe it pulls back to 47.5 cents again, and then maybe I'd want to add then. I'm just not too aggressive with buying these shares right now. I don't have any buy orders placed, but I am selling covered calls with Biora. And so last week I had all of these orders placed, but as you can see, all of the white ones, none of those were filled. The only one contract that was filled was this one with the expiration of October 18th, so quite a ways from now. But that is to sell 100 shares at a strike, an average price of $2 per share, which is just above my average. So, that would be fine, although, it'd be much better to be selling at $2.50, $3, or $4 a share. But this is a nice way for me to pick up $5 per that contract. And, so it's just nice to add a little bit to my portfolio. And so that is the only one that typically gets filled. And as I have been doing, I did go over this in last week's video, I believe, that I just trim off the one that expires most recent to now to then replace this order. So let's see, last week I trimmed off the $4 strike with the expiration of August 16th. And so for this coming week, I'm trimming off this $3 strike with the expiration of August 16th. And so we can see here August 16th, I just have one contract, and that's at a strike of $2 per share. I just think that one's much more likely to fill than the $3 per share contract. And so that is why I have removed that, and I have replaced this one with the October 18th expiration, that being, $2 right here. So that is replaced. Hopefully that gets filled again. So then I just make, $5 more on the shares that I hold. And, this is the number of shares that I still hold that I have not sold as covered calls that I won't get back until October 18th. But yeah, that's kind of been a nice strategy for me, holding the bag with Biora. Hopefully, it does get back up to $2 a share at some point. I'm sure it will. At that point, I might want to trim heavily, or, I might be forced out of my position if these contracts are closing in the money. But, that takes the emotion out of it, so it works for me. And so now the next one on the list here is ChargePoint. But before I go over the ChargePoint covered calls, I'm first going to go over the stock chart and the kind of additions that I plan on doing, and also go over my activity from last week. And so here, looking at ChargePoint, I have an average share price, I believe, around $2.37, a little bit below the high that was hit on July 17th, that being $2.44. So, I'm kind of kicking myself a little bit for not at least trimming when it was up there. But I am glad that I started to recognize, hey, this looks like it might be a bear flag and it might be coming lower. Might be finding support around where it's currently at, around 186, that being the 50% retracement here. But I could see this going lower to right around $1.70, and so I believe that is where I have my buy order placed for ChargePoint. Actually, 175, thinking that the 618 is at a price of $1.72. Maybe it doesn't get down to that exact level. I do like to have fun with 69, so the 65% level is at 168.6, so I could do 169. But if it does come down to 175 and that fills, I could then add another order because my share count would not be divisible by 100 at that point. But, I could also see that maybe it just wicks down to find support at this downtrend, doesn't get all the way down to 172 or 169. And so if that's the case, I'd at least add to my position with also the flexibility of being able to add more if it does dip lower. And I actually feel like it will be dipping lower, testing the 65% retracement, maybe even coming down to 150. But I'm going to be adding in increments based on these levels with 175 seeing like a nice round number considering that, we think in dollars and quarters and whatnot. So that is why I have that order placed there. And so that is just for 17 shares. I believe that would put me up to, however many, I think 1,400 or something like that number of shares. Plus, this would get my odd amount up to around 50, I believe. And then so I could, continue to add as it dips. Like I said, $1.75 there. I didn't see any unusual options activity, so I don't have anything posted here. If we do look over at the price from last week, I had a limit order placed at $2.03, just for one share, so not really that exciting. That was filled, and then every single day that the price was below my average, I added an additional share, just slowly getting my average down, not being too emotional or heavy about it. And yeah, so I'm slowly getting that share count up to be divisible by 100. And, just don't want to be too aggressive with either of these, so I can have some flexibility with options. And then speaking of options, let's take a look at the covered calls that I plan on selling with ChargePoint. Actually, I could look at first, let's take a look at what I did last week. So it looks like I sold 6 ChargePoint contracts. A couple of them expired on Friday on the 2nd, so I'll get those back. And so my average, like I said, is around 237, somewhere around there. And so I've been selling covered calls ranging from $2.50 up to $3.50. And so any of those prices, it'll be fine for me to trim if it ends up, closing in the money above 250. And, if it never comes back below 250, that's fine too. I have enough shares. I'm not worried about it. And these other contracts do expire ranging from, the 9th, so coming up this Friday, or the 16th, which is the Friday after that. And then the contracts for this coming week, I've got 6 contracts. That's going to be based on these that expired on Friday the 2nd. Those will become available for me to sell covered calls on, or sell, do whatever I want with them Monday morning before pre-market, and then, or during pre-market, and then I'll place these orders so they're set at market open. And so I will go over these in the table as well, just like I did with AMC. So a couple of them are for the second strike of $2.50 and $3, both with a limit price of 1 cent. So I get $1 for them. So not really that exciting, but like I said, it just kind of takes the emotion out of whether it's trimming or selling, taking profit, stuff like that. And then a number of contracts, 3 contracts. It looks like with the expiration of August 9th, and those strikes being $2.50, $3, and $3.50. And so from those, I'd make, whatever this is, $6 about. And then the following week, the 16th, there's actually a contract with a strike of $4 a share that does look like it has a bid price of 1 cent. So I think that will be getting filled at open. So that's why I want to have that order placed. And so yeah, I'll just go over these in the table real quick. So looking at ChargePoint for August 9th, we can see that the bid price here to sell a contract for a lot of these is 0. But if we look at 250, it is 1 cent. That's where I intend to place this. That's why it's red. I haven't placed it yet. I intend to place that before the market opens. And then $3, I will place that order at 1 cent. But as of right now, it probably won't fill it open. Maybe if we get a bounce or something, it will fill later. But I just like to place these orders, especially when it's during on the week that they expire. I just like to have them placed at the start of, market opening on Monday, just to have it out of the way. And, maybe I could make more money on them if I'd, wait for some more bullish activity to then, price to go up and then these would potentially be worth more, but I just like to have them placed and done with before the market opens. And then so looking over at the 16th, we can see those contracts there, and let's see. Actually, I noticed something that I screwed up here, because the second is behind us. So I don't know. Yeah, I guess I don't have 6 contracts. I think I really just have 4, and then would reevaluate. So I need to omit those. So, sorry, kind of a rough cut. But yeah, the second is behind us, so I can't do anything with those. So it would be, yeah, probably what I meant to do is this being, we can see on the table, in the options table. So this should actually be August 9th. This one would then be the 16th. And so $2.50 should be $3. We can see that here. Then $2 is the, or 2 cents is the strike for $3. And then I have the $3.50 and the $4 strike. So that would actually be, $3.50, believe it or not, it has a sell, a bid price of 0. But if we go up to 4, there's actually a bid price of 1 cent. So what I've found with Webull is that the higher strike orders tend to fill sooner. Just, if there's gamblers out there or whatever, trying to buy contracts with a higher up out of the money strike. So I actually feel like the $4 strike is more likely to fill than the $3.50 one, but we'll see about that. And so, yeah, I should note that these first 2 for ChargePoint should be the 9th, and then these, all of these, the 9th here and this one on the 16th, they should all be August 16th. So sorry about that confusion, but hopefully that makes sense. And then so now I'll get back onto the next ticker on the list. I should note the next one with covered calls is going to be Luminar, so I'll come back and go over that in a minute. And so looking at Chewy is the next one on the list. My limit buy order for that is $20 a share. It might seem pretty low, but the reason for that is going to be based on, let's see if we can see all of that. I'm just going to try to make this as full as we can get it. So yeah, Chewy, it actually looks bearish with a call with a $25 strike, and so that suggests that it was a bid order or a sell order, and that's with the expiration of August 16th, and that's so that's something that I searched myself. And so let's look at the Chewy chart, and then also the options table. And so the reason why, I picked out $20, initially I was going to do $21.85. Price is a little bit above that right now, but we see the lows over here. So the low from June 14th was 21.73, and then over here the low was 21.89. So just kind of like splitting the difference, 21.85. I was thinking that's a nice dip buy, but since I saw that, options flow in unusual whales that suggests that it's kind of bearish, I'm thinking, well, maybe this gap down here at 1691 will get filled, or maybe not. Maybe that doesn't happen. And if it doesn't, I see the 786 here at 1991. Maybe it doesn't get exactly to that level, so I'll just place an order at the round $20 price. So maybe that gets filled. Maybe it doesn't. And if it doesn't, that's fine too, because I'm going to be looking at the options and see if I can take advantage of this. Although this one, because it's, just a couple weeks from now, and the average fill price for this contract that I saw was 76 cents. So that translates to $76 per contract, as it represents 100 shares. But, I just kind of want to keep an eye on that to see, does this premium go up or down? If it goes down, my understanding of the bearish and bullish sentiment, or the trajectory, is good. So, this is just kind of a test for me. But so if we look at the, let's see, $25 call expiring not this week, but next week, and actually, yeah, so this is a call. Okay, the $25 call, that has a premium to buy of 58 cents or $58. And if we look at this, the premium here was 76. They sold, premiums come down. So that was a good move for them. So that does make sense. It's making 20 bucks just about, or not necessarily making 20 bucks, but avoiding losing 20, or I guess I should say, is that $18. So, that is useful, what I found there with unusual whales, although, it's in the past, but that contract, as far as I understand, is still open, or those contracts, it's a number of them, or really, it's the same contract, but it's a number of the same contracts, all with, this expiration date and strike. And so anyways, that's one that I'm just going to keep my eyes on, but it does suggest bearish activity, and so that's why I'm placing my order at 20 rather than 21.85, because I'd like to get more shares. I think I only have 2 or 3 Chewy shares, so a very small position. It'd be nice to add more, but I'd rather add more at $20 a share, so I'm going to wait for that. But yeah, I'm really excited to see, what happens with the options activity there, so we'll have to see. And then speaking of, exciting options activity, GameStop, it might be some interesting stuff coming up for not this month's expiration, but the monthly expiration in September. So I'll talk about that in just a minute. But, as far as I understand, this suggests bullish activity, but that is over the course of the next month. And I believe, I think this was actually a pretty big order, and that premium's $3.15. I'm getting excited talking about the options. Maybe I should take a break from that and just talk about, this buy that I have here first. And that's at $18 a share. So if we flip over to the GameStop chart here, why am I picking $18? I think I did see some contracts that are a little bit more or that will be expiring sooner than September 20th. And they suggest to me, at least as far as I understand, that we might be seeing some more downside. And so, I'm going to, at least for this week, wait for $18. The reason for that is the low over here was 1770. That was the low hit on, let's see, May 24th. And then also we do have a gap here. That was the closing price from May 10th. At 1746, this blue line here. So just a number of levels to the downside. Maybe we don't fill them exactly though. So that's why I have the order placed just for one share at $18. But I do think that this, call option that I was just talking about, that is encouraging in my view, because I've been thinking that the options will be suggesting whether or not we start to get some bullish activity, and especially around the monthly contract. So whether that's August 16th or September 20th. September 20th is not only the monthly and weekly options expiration, it's also the quarterly options expiration. And so with that being said, I think that there could be a lot of volatility around that contract expiration. And this does suggest that it will be to the upside, but maybe we see some dips leading up to it, as that is more than a month away. So I think that we could be seeing some very bullish activity, especially from the current price being below $23. But, with that being said, since that's a big order, all of these should be big orders, by the way. But since this is a big order, these contracts are very expensive, over $300 per contract. That is an out-of-the-money call that's being placed. That suggests that it will likely be moving in the money. So I think that by September 20th or leading up to it, we'll be seeing some bullish activity with GameStop, and I think that will be reflected in AMC, Chewy, whatnot. So I'm pretty excited about that. But also, AMC, Chewy, more, I guess, AMC, bearish leading up to here, but the contracts are much cheaper than they are with either Chewy or GameStop, really, just because of the price per share. And so Yeah, I think that this does get me pretty excited about these, three meme stocks, the Roaring Kitty stocks, the ape stocks, whatever. So I'm excited about that. But yeah, if I do look at this contract for GameStop, that's going to be the expiration of, let's see, September 20th right here. And I got a lot of options in that table. It's a $23 strike. So if I scroll down to that, we can see that here. And so the ask price for that is $3.15, and currently it's actually lower than that. It's $2.42. So, that could be suggesting that, we're seeing some discounted call options pricing here. But for me, too much of a gamble when it's, more than $100 per contract, like I mentioned, with American Airlines. This is too much of a risk for me, but I do think it's interesting. I wonder if that does suggest that we will be seeing this moving into the money before September 20th, and with that gamma ramping and gamma squeezing up like we saw before. So I feel pretty good about that. But unfortunately, with GameStop, I don't have 100 shares, so I can't be selling a covered call or anything like that. Just kind of hedging in the position that I have. But I'm fine just holding the shares that I do have, so no big deal there. And then let's see. Oh, and I guess I should mention, what did I do last week for GameStop? I did get one share at a price of $23.69. Why did I have that order placed? Let's see, $23.69. That was really just right around Roaring Kitty's average price, $23.41. Just having fun with that 69 cents, in case we didn't pull down to $23.41. But I also did add another share at the price of $21.69. I believe I did. Let's see, I'll actually check that on my phone to see if that order was placed. Just one second here. And I believe I did $21.69. Yeah, I picked up another share there. So not too exciting, just one share, but that was a level I was eyeing. So, wanted to pick up a share. Could have gotten it lower, lower than $21 a share, but I'm happy with that. And I don't want to be too aggressive. And rather than just being greedy and picking up another share right at open or in pre-market on Monday, I'm going to be waiting for $18 a share. And if that doesn't get hit, it's fine. I'm just holding 18 bucks on the side in my account, so no big deal there. And actually, so moving on to the next ticker on the list, Hycroft Mining. This is another one that I do not hold a position that's divisible by 100 shares, and I actually don't have 100 shares. I only have, I guess this would be, is that 21 shares? So kind of a very small position. I think, yeah, I'll probably leave this so that it does fill so I can sell covered calls with it. But this makes me think maybe I want to leave some of that cash on the side for options, as there wasn't anything too exciting with Hycroft Mining for unusual whale options activity. And so if I do look at the price that I had set for last week with Hycroft, that was 236, and that was not filled. But if I do look over at the chart for Hycroft Mining, we're about just exactly 5 cents as of the close on Friday, 5 cents above 236. The reason why I highlighted that level is because that is the 786 from this Fibonacci retracement that I've drawn here. So, hopefully that order fills, but if it doesn't, I've just been doing one share, pretty boring, especially with it only being, a $2 some cent per share stock. But, I'm just going to add one share per day that it's lower than my average, which my average isn't excessively higher than the current price, but every day that it's lower than my average, I'll add one more share, and then I'll adjust this number down. Currently, it matches last week's, but if you look at last week's weekly trading plan, this number would have been higher because I've just been accumulating one share per day. And so, I hope the order fills, just drop in 5 cents, and then I'd be able to sell a covered call. I believe it's probably just monthly contracts for Hycroft. Yeah, so it's really not that exciting, but, it's just something that I like to do, and then I just hang on to that 100 share position, and maybe eventually, if I wanted to sell a cash secured put, I could accumulate in another 100 shares. Yeah, but right now, just building up to that 100. And so, yeah, nothing too exciting with Hycroft. But yeah, I will leave the 79 shares, and hopefully that'll get filled this week, so I have that 100. And then so the next one on the list is Luminar. I will be selling covered calls with them this week. And there was unfortunately no exciting options activity with them, and they've kind of been notorious in my view. They don't really have much exciting options activity, but they do have their earnings report this week, so maybe there'd be some volatility around that. I believe that's Tuesday after the market closes, and I could either do Luminar or Rivian's live stream. I do have more invested in Luminar, so I kind of have an interest in that, but I'm also interested in Rivian. And if there's more enthusiasm about Rivian, I'll probably stream their earnings call on Tuesday afternoon rather than Luminar's. But anyways, last week, I should talk about that. I did get my order filled. It was 41 shares at an average price of $1.50. If we look over at the Luminar stock price, it's below $1.50, so that kind of sucks. I could have gotten them cheaper, but now I do have a position, I believe 500 shares, that's divisible, by 100. So I can just be selling covered calls on that. And then if I want to accumulate more shares, just do it by selling cash secured puts. And so the reason why I picked $1.50 as a level is, because the 786 here is at a price of $1.48, just rounding that up, $1.50. And so, yeah, that order was filled. Yeah, but I did pick up some shares, on the days up here. My average, I believe, is around 250. So every day that it closed below my average, I added another share, and then I added the remainder of, let's see over here, 41 shares to get that average or total count above or divisible by 100. But then the next level that I see coming down for Luminar is going to be $1.30. And the reason for that is we saw the low here of $1.29. That could also coincide with retesting this purple downtrend, which may or may not be that significant since we have broken below it. But, just because of these two pivot points, I find it kind of compelling that it has respected that level in the past. And maybe, we will be returning to it. And also I do have this, white line here around 136. I just don't want to be too aggressive with it because if I would be, picking up more shares, it would be a lump of 100 shares. And, I kind of just want to wait for price to come down for that order to be filled. But right now, I don't have an order placed. But if I do think that price could be coming down to around 130, I'd consider selling a cash secured put. And that would probably be, I'll explain how I will be doing that if I were to do it, but I'm not placing the order now. And so let's see, $1.30 is the average that I would want. So if I look over at the options table, pull up the puts, what I would do, let's see, I'd probably do it maybe not for, maybe for August, 9th, if, price drops to around $1.30, I could potentially sell this put with a strike of $1.50 for a 20-cent premium, and that would effectively make my average buy be $1.30. And so that is how I would do that, just by placing a cash secured put with a strike of $1.50 with the premium set to our limit sell order at 20 cents, translates to $20. So I get $20 back on buying 100 shares at an average or a strike of 150. And so then I put my average, buy at 130 once considering that premium. And, but I could also do it for not this Friday, but the following Friday. And so $1.50 right there, right now, I could get 17 cents premium. And so, that's pretty close to 20 cents. So if I wanted to pick up another 100 shares effectively at a price of 130, I could do that, but using the August 16th expiration. So maybe that's something I'd be intrigued to do if I did have some cash on the side. So that is something that I will be thinking about as I do have that noted here. But right now, no order placed. So that's something I'm just going to keep my eye on. And because, this is one that I do hold a number of shares on, I will be selling some covered calls. Also want to be going over, the covered calls that I sold last week. So it looks like I sold 3 contracts last week, 2 with the expiration of August 9th, and then 1 with the expiration of August 16th. Those ranging from 250 to 3 to 350. And so, those are all above my average, so I'd be fine to trim and or, take profit from that. And also, I should note that the total that I made from selling covered calls last week was over $40. So pretty nice to add that to my account and to be able to have some flexibility with moving that money around. So, that's why I like selling covered calls. But then for this week, the ones that I would be selling, just 2 contracts, because as I had mentioned, I believe I have 500 shares now. With 1 contract, I guess I sold the week before, expired on August 2nd, so I'll get that back pre-market Monday. And then because I sold, actually, wait a second. Yeah, I guess it's a couple contracts. Plug is the one that I did a cash secured put on. I'll talk about them in a minute. But the 2 ones that I have here for August 9th and 16th, $3 and $3.50 strikes. And so why did I pick those? And so if we look at Luminar, the calls, we can see for the 9th, the 9th is the $3 strike, and that's just because, why did I do $3 rather than $3.50? Why didn't I do both $3.50 on the 16th? I get the shares back on the 9th or the Monday following the 9th if that expires out of the money. So that's why I did one here, but then the next one, a little bit higher strike, so that'd be great for me if it was in the money. But either way, I get $1 from them. And so looking at the, what was I saying? $3 for next week. That is, a premium for a sell of 1 cent. So, at market open, that should fill. And then looking at the 16th for $3.50, again, that should fill at market open on Monday. So, easy peasy, make a couple bucks. Nothing crazy, but, if you do it every week, those dollar bills stack up. So that's what I'm all about. Little by little, it adds up. And so, yeah, there's the chart, and I think I went over everything with Luminar there. And so now I'm going to get into NEO. Again, this is one that I have a price level identified, but I'm not buying any shares, and that's because I believe last week I thought I had an order fill last week that. Yeah, I guess not, because this is white. Oh, no. Yeah, what happened last week? I'm just going to pull it up on my phone. I got all this stuff handy here. That's where I do my trading. I don't do my trading on the desktop. But so, let's see. On July 24th is when I added my share count for NEO up to 100 shares. Oh yeah, that was actually a couple weeks ago. I probably mentioned that in last week's weekly trading plan. But since my position, I believe I just have 100 shares, is now divisible by 100 shares, trying to sell a covered call. And I would be waiting for here last week to consider buying more shares at $4.20. Probably just having fun with that number. But for this week, I am actually looking at a price of, let's see, $3.50. And so part of the reason is because what I saw on Unusual Whales is bearish activity or suggesting bearish moves moving forward. And also, let's see what the current price is. I believe it's right around, $4. So, I'm thinking like, man, $4, maybe that's going to act as support. It'd be great to add more shares. But if I were to add more shares, that could be, by selling a cash secured put. If we look at doing that for, this week, $4 cash secured put, I could make $13 on that. And then that would put my average cost at, $3.87. So maybe that's of interest, but, I don't want to just be piling in another almost $400 into NEO. So I would just be kind of hanging out. And like I said, my dip buy level would be around $3.50. And that's really just because, I don't want to be too aggressive with NEO. As far as accumulating another 100 shares. The low over here was $3.61. Maybe there's a level nope, I don't see any level there. But I'm just thinking that, $3.50, maybe it breaks to a new low here, as it is Let's see if I adjust this in this downtrending channel. So, I could see it coming down to a new low. The 52-week low is 361. Maybe it comes down to 350, and I'll be happy to add then. If I add now, I won't be happy to add at 350. I'd be spread too thin. So, I'm just going to chill this week with NIO, but I'll be keeping my eyes at 350. And so the contract that stood out to me, I guess this was filled on the ask because it's a put here. You see that P, but that is for the expiration of this coming Friday on August 9th. So that's why I have this nervous face here. Not thinking about it, just nervous about it. The premium or the average fill for that order was 12 cents, so $12 per contract, and that is a $4 strike price. Since the current price is right around $4, that closing in the money would mean for that put, that would mean that price is coming down to below $4 a share. And so, and with price being so close to $4 a share, it's a little risky, in my view. Also, it's a little risky because the expiration is this coming week, but that's why the contract's only 12 cents or $12 per 100 share contract. And so, maybe I'll look at that in the table to just give kind of my perspective on that. So here looking at puts for the August 9th expiration, and that is let's see, to buy, this is 14 cents. And that order was filled at 12 cents. So, maybe there's something interesting there, just risking 12 cents, $12, and maybe that could be turned into, let's see, $14 or $18. So not a huge increase, but definitely increasing that percentage, getting a nice percentage gain on that. Even though it's a small risk, the percentage gain could be pretty nice. So, maybe that's of interest, but it's probably too risky for me, but I will watch it and kind of learn, get better with dealing with options. And speaking with options, since I do have 100 shares of NIO now, I will be selling a covered call, or attempting to. Last week I attempted to have one filled with a strike of 550 for 2 cents, or getting $2 for that. Was not filled, and that was for the expiration of August 9th. And so this week, what I'm trying to do is actually a strike of $6. So why am I doing that? I'll show you that in the options table in just one second. And so that's a fill or limit buy at 1 cent. So I get $1 for that, and that is for this coming Friday. So if we look over at the options table, pull up calls, we can see that the $6 strike has a sell or a bid price of 1 cent, whereas 550 is 0. So, maybe I get, $1 for that. And if it closes miraculously above $6 on this coming Friday, then I make a little bit of a profit, a nice profit on the shares that I'm holding. I believe an average of probably around 450. So make, $150 on that. That'd be pretty nice. But yeah, so those are basically my thoughts with NIO. And now I will move on to the next ticker, which is Palantir. And so Palantir, they're reporting earnings on Monday, I believe, after the close. I'll probably stream that. And I did actually, the reason why I started looking up all of this options activity, was getting, results in Unusual Whales that seemed pretty useful to me, is because from Unusual Whales Discord, I saw these alerts for, hey, I hold some Palantir and Rivian. I'll check out those alerts, see if I can figure out how to find them. And then I started finding other, signals that seemed pretty good for these other tickers that I, searched for. So these were the two kind of examples. And so the one that was alerted for Palantir was at a strike of $21, and that's a put. And so I assume that means that it was a buy or an ask. And that average fill price is 45 cents. And so I'll talk about that in just a second. But, because that was bearish, that kind of, inspired this lower limit buy that I have placed. And so, it's $22.36. If we look over at the Palantir chart, right around $25. So, do I really think that price is going to be going much lower? If that unusual whale is suggesting that price is going to be going lower, and that is with an expiration of this week, so, still got that nervous emoji because it's, coming up this week. put of $21, that suggests price is going to continue lower. They've got earnings on Friday, so earnings on Monday after the close. So somebody is betting that price is going to be going down. And yeah, so that's why I have the order placed at 22.36 rather than, right around 24. Let's see, last week, what did I have my order placed at for Palantir? That was at 25.08. That was filled, and I believe that's the last buy that I had for Palantir. I try to limit my additions to, what's on these tables, but sometimes I do get greedy. 25.08 was the last one. So yeah, I mean, I could pick up another share around, $24, and it is around where there's this support here, or I could have done that, but I do feel like price will be coming lower, and I have it at 22.36, maybe kind of an odd number, but that's because that's the 786 here at 22.36. Could have done it, I think I was debating doing it at 22.69 or 22.50, but, I decided I'll just do 22.36. I don't need to be too aggressive with it because, I'm very curious about that options activity. And so that options activity, let's see here, August 9th, $21 put, 45 cents. So let's look at the options table here, pull up the puts for August 9th. $21 is down here, and that's the buy, 45 cents right now, whereas, it was 45 cents. So that's, in order, it's, at that same price. So while it's risky with that expiration coming up this Friday, maybe that 45 cents translates to $45 per contract. Maybe that could be turned into $55. A nice little swing there. Don't want to be too greedy with the expiration coming up so soon, but with their earnings being reported on Monday after the close, there are still 4 days following that to close that position. So maybe it is something that's worth a $45 risk to get one contract. So, it depends on how much I have on the side. Maybe that is something I would be interested in to risk $45. Just kind of have some fun taking advantage of the tool that I have that is unusual whales. So yeah, pretty interesting there. But like I said, not being too aggressive, being nervous and cautious about that. And then next, I will be talking about Plug Power. So this is one that, I was pretty proud about how I added to my position, and actually, these labels are screwed up here. This cash secured put should be associated with Plug here. I don't know how that got adjusted, but the reason why I picked up 100 shares here is because that was a cash secured put. So screwed that up. But the way that I did that I think is really interesting. When price was around 250, Plug Power, I placed a limit order to sell a cash secured put at a limit price of 25 cents. And so that put my average at $2.25 since Plug closed. I'll switch over to that chart. Since Plug closed below 250, that order was filled and I picked up 100 shares at 225. Kind of sucks because if I would have just waited for close on Friday, I could have picked up 100 shares for cheaper. But, I didn't pick up 100 shares at, this Fibonacci level, the 786, which is at, right around 245, I believe. I didn't add 100 shares there. Instead, I placed a cash secured put. And so that got my average lower than it would have been if I had just bought there. So I feel like that's a nice way to, add to positions, although it would have been nice if price closed at like 249. I was actually feeling pretty good after that order got filled, I believe on the 30th with this big wick down. I imagine that's when it got filled. The following day, price went up to a high of 256. So I was feeling pretty smart then that, hey, I made $25 in that premium. If it closes above 250, I don't pick up 100 shares, but I get that premium. So it's kind of nice. But, as it turns out, price has come down. And, I'm pretty curious to see what will happen. Earnings are coming up on the 8th. And so this is one that, this is the ticker that I first realized from these two examples where I got the alerts. Plug is the one that was the first one that I searched independently with these examples from the alerts. And I found that, hey, actually, Plug looks like it might be pretty bullish, and it's not an expiration for this coming Friday like it is with Palantir. It's an expiration for next Friday on the 16th, so it's a little less risky. And so that is based on a $2.50 call with an average fill price of 11 cents. So I'll get to that in a minute. But I did want to point out that I do have, my limit price would be $2 a share. You can see I don't have an order place there. And the reason for that is because, price has come down to 214. That's a new 52-week low. Maybe it does continue down, and I just don't want to be throwing, $215 at plug if it might be coming down more. Who knows? If it comes down to $2 a share, then I'd consider, hey, maybe I want to buy sell a cash secured put, and then maybe I just capitalize on premium if it does go up following earnings. And so, the thing that's interesting, thinking about, Plug versus Palantir, as far as them both having earnings this week, Plug's earnings call is, I believe, Thursday morning, so it's pretty close to Friday the 9th, whereas Palantir's is on Monday, so it's not as risky with that expiration on the 9th, whereas it would be really risky for Plug. This gives that trader, that position, an extra week to pivot. And so, I just find that really neat. And so I don't really think that price is going to come down to $2 a share. But since I did just add 100 shares last week, I'm not, going too crazy to add a lot more this week. Kind of want to rotate amongst the stocks that I have. And so considering this 816 call 225, let's look at that. And so it's the 16th 225. That is to buy that is 44 cents. And so, these are puts. Sorry, these are puts. Calls to buy that is 12 cents or $12 per contract at a strike of $2.50 for a call. And so compared to that average fill price, it's gone up $1. So, it's great for them, but that's not really too crazy. So I feel like there's still opportunity to kind of add to this to take advantage of any momentum around Plug Power's earnings. That will be Thursday morning, which I will probably be streaming that as well as the Palantir earnings call. So I just think that looks really good. And this has actually kind of informed me on, how do I want to handle selling covered calls if it's expected to be bullish following earnings. And so I'm going to be taking a little bit more of a conservative approach this week with Plug Power. But if I do scroll up, we can actually see going back to last week, I did sell a couple covered calls. Sorry, I stuttered a little bit there. Can you see that, or is Ed's head in the way a little bit there? So two of these contracts, strikes of $3 and $3.50, just made $1 on each one, so nothing crazy. They've already expired on the 2nd, so I get those shares back. And so now I believe my position for Plug is 300 shares, considering those two 100 share positions, and then also that cash secured put that I had just sold. I now have another 100 shares. And so rather than doing strikes of 250 for this coming week, I was a little bit more conservative. And so I'll take you over to the options table for Plug Power now, looking at the 9th, so my average is, I believe, 248 for Plug. I could sell a cash secured put and get, $7 premium for that. But if the sentiment is that Plug is going to be bullish, let's see, is that behind me? If Plug is going to be bullish following earnings, I'd probably be getting rid of my shares at $2.50. So, that's fine. That's above my average, but not by much. I'd probably want to hold on to them a little bit longer. So that's why I'd be selling my covered calls at strikes of $3, $3.50, and $4. And so from those, I'd collect premium of $3, $1, and $1. And is that how I did that? Actually, for the $3.50, I boosted that up to 2 cents or $2, just because, $4 strike is 1 cent premium. I'll just do that 2 cents. So in total from Plug, I'd be making, let's see, that's about $6. So nothing too crazy, but that would also, let's say plug goes up to, closes on Friday at 305. It forces me to trim, take some profits, whereas I'd still also be holding, 200 shares. So, I want to be doing that. I want to be in and out of positions. I don't want to just be holding through rips and then having to suffer through the dips. But yeah, I mean, I'm pretty excited about plug, and my position for this week will probably not be partaking in buying shares, but more likely buying calls that expire not this Friday, but next Friday, and just swinging those for premium, because I think that this, I could buy 2 contracts and I could potentially sell one at a limit of 22 cents. So I'd turn $11 there into $22. If I have 2 contracts, that pays for that second contract. And then that's just, house money. And then I can hold that to really see, maybe it goes up to $1 per contract. That's $100. So that'd be pretty nice. So yeah, I'm really excited about the plug power unusual whales activity that I've seen. So pretty cool there. But now moving along, this is about an hour and 5-minute long video so far. So I got to move on to the next ticker, which is Rivian. And so, my buy price influenced by what I've seen from unusual whales is bearish sentiment or bearish activity. And so my limit buy would be at $12.31. So why did I pick that level? And also I should note, last week I did, pick up a share at $15, which is pretty interesting. We'll look at the chart. I could have adjusted that. I think I actually adjusted it up to $15. It could have been filled a little bit lower. But yeah, anyways, let's look over at the Rivian chart over here. And so I did have this level at 1481. That is the 382 from this retracement. 1481, I had placed an order at 1485, but that wasn't filled. And, I was kind of wondering, maybe this is a bull flag and I don't want to miss it, taking off, but it was a down move followed by consolidation, kind of a bear flag more than a bull flag. And so we've seen this pullback. And, my order was filled at 15. Not a big difference, just one share, so nothing crazy. But 1485, that could have been filled. I should have stuck to my guns. But since I didn't do that, I want to be a little bit more conservative on the downside. And Rivian is reporting their earnings on, let's see, I don't have to think about it, on the 6th, which is Tuesday after hours. So I'll either stream Rivian earnings or Luminar earnings, depending on what's most of most interest by the community. But so anyways, with earnings coming up, there being bearish sentiment or bearish moves as far as the options chain goes, I would rather than, picking up another share at 1356, which is the 50% retracement here. As I had mentioned, had that order placed at 1231. Why 1231? That is the 618 from that retracement. And that does look like it could correspond with, actually, it could even go lower if it was to test this neckline that I had previously highlighted, that this is the left shoulder inverse head or inverted head, then the right shoulder over here, or right here, I guess. And then we did get a measured move to the upside, so pretty nice. But now we're pulling back, and maybe we pull back to retest that scene of the crime. That could be coming down to lower than $12 a share, but maybe it doesn't come down to that level. I don't want to be greedy, and I don't want to be stubborn about it coming down to that level. So that's why I picked 1231, and that's close enough to $12 a share. And, if it is to pull back that low, I'd just be happy to add more, in following weeks. So, not getting too crazy with Rivian because this is one that, I'm really just starting to build a position over time. Didn't want to be too aggressive when it was up here, but recognize this is one that I want to hold for the long term. And so now when it does come down here, if it does start to hang around this downtrend, then I can start to get more aggressive. But right now, just kind of chilling out one share at a time at these levels as it dips. And so this, let's look at this contract here from the alert. That is expiring at the end of August, so kind of an odd contract. But that is a put for $12.50, and that average fill was 53 cents. So $12.50 lower than current price. And if we do look over at the options table, pull up the puts and the August 30th expiration. I did say 1250. Is that right? Yeah. So 1250 looking over here. And that is, and that is an out of the money put. So, when you get big moves, that are out of the money, that's the time to, pounce because it's risky at the time. But there's more potential for gain really when it moves from out of the money to in the money. Once it's in the money, there's less potential for gain, but it's a little bit safer. But so anyways, $12.50, $53 for that contract, and that is the fill. So, that to me seems like, and it's also, I believe 3 weeks from now. So that's, going to the 9th, 16th, 23rd, and it's 4 weeks from now. So there's a lot of buffer room, a lot of wiggle room there. So I find that one to be pretty intriguing. I got the thinking emoji there because I'm thinking about that. And maybe I should change the plug power one to the greed emoji, with the cash eyes and the dollar tongue, because I feel pretty excited about that one. But anyways, Rivian, the only reason why I'd be a little bit hesitant to do this, a little reluctant, is because that contract price is over $50. And so that's just potentially throwing away $50. But then I could, set a limit. But actually, yeah, I mean, if it's that far out in the future, I wouldn't necessarily want to set a limit to like 63, so I'd make $10. That's like a 25% profit. I potentially want to hold that to, 2x it to get that up to like over $100. So that'd be over $1 per contract, or 106, I should say, to be precise. But yeah, I mean, I think that's pretty exciting. And, I would just love to be adding more to my position more aggressively down lower and potentially, taking advantage of the options activity and, taking advantage of the service that I'm paying for with Unusual Whales. So that's one that I'll at least be looking at, if not partaking in. But then, yeah, the next one on the list is Rocket Lab. What did I do last week? I had an order filled at $5, nothing too exciting, just one share. I've been patient with Rocket Lab. If we look over at the chart, I think I started adding up here, but thinking, it might start to look weak. I just have a few shares, I believe, and that order, was filled based on, really just psychological level, $5, but also the 382 being at 493.5, just rounding that up to $5. So that's why I had that filled or placed that order there. And then so for this week, the level for me is 450. Where is price currently at? It's above 450, but why would I pick 450? The next level down on this is 465.5. Maybe we find support there, but looking at the options, or from Unusual Whales, have some bearish sentiment there. That is a put that was an order filled on the bid side, so suggesting a sell. $5 strike, and that's expiring the monthly expiration in September. And so we can look at that. But since that does suggest bearish sentiment leading up to earnings, and their earnings report, sorry for switching around, that is on the 8th, which is Thursday. I believe that's after the close. I'm not working Thursday, but I do have to go into work for an hour. So hopefully I can do Rocket Lab, but I am already committed to doing Plug in the morning. So if I have to go into work for the hour when their earnings call is, I won't be able to stream it, but I would really like to because I like Rocket Lab and the community around it. So hopefully that does work out. But with that being said, the bearish sentiment, why do I think 450? The next level down below the 50% retracement, which like I said is at 465.5. The golden pocket ranges from 430 to 437.5, but we do have this uptrend here. That's right around 450. And that uptrend is based on, this level that, maybe continues to hold as support as it did over here, even though we broke below it. Maybe it will be reestablished as support again. And so 450, I'd add another share there. But then thinking about this contract, that's $45 in premium to buy that contract. But really, they sold it at 45. So if we look over at the options table, this is for September 20th for the monthly expiration, $5 call. And so if we look at that, that is to sell it. That would be 50 cents or $50, and they sold it at $45. So they could have made, $5 per contract that they hold, but they decided to exit, and I think that's because they're expecting bearish activity or bearish moves following earnings. And so, that is not something that I would want to buy, but that is something that I would want to watch. And I don't have 100 shares to be able to sell a covered call, but I could at least be looking at that to kind of be learning from it. So I find that to be pretty interesting. And then the next one on the list is SoFi. That one, I did have an order placed last week at a price of $6.56, and I contemplating duplicating that order, but because of what I saw in the options from Unusual Whales, $6 put that looks like it was open with the expiration of 8/16, and that makes me feel like, whoa, maybe 650 is going to break. And that order would be filled, and maybe my $6.03 price target would be hit. A lot of people are not going to be excited about that, but I find that to be pretty interesting. And so if I do look over here at the SoFi chart, doesn't look like they have earnings until, October, the end of October is what it looks like. So that's a ways from now. But looking at the chart here, 656 is the 786 from the move from 615 up to the high of, I believe, 806. And so, I was thinking about doubling that, but if there's sentiment that this is going to go lower and I've identified this gap here at 603, I'll scroll out a little bit so you can see that gap right here, 603, and I have another gap below that at 541. Maybe this is when that gets filled. So rather than just adding another share at 656 or, 2 shares, that would be getting my average down. I have 2 or 3 shares now. I'm going to wait for 603. And if that gets hit, then I'll add 2 shares. That's why this column is addition. I can just easily add to my positions each week or to the orders. And so I added a share to that, but that's at a strike of 603, or not a strike, a buy. A limit buy at 603 rather than 656. And so I'm really intrigued by that. And that is for SoFi. And so this is a put with a $6 strike, again at that gap fill level. I find that very intriguing. The fill for that was the average fill was 10 cents or $10 per contract. And that's an expiration of 8/16. So let's look over at the options table for SoFi, looking here at calls. Then the 16th expiration, a strike of $6. So to buy that right now, oh wait, this is calls. I meant to switch it over to puts. Sorry about that. 10 cents, still, $10 per contract. And so that matches what's over here. So, I feel like that's pretty compelling, so that I should put, I should change this to a, rich emoji, the, cash eyes and tongue, because that's one I'll probably partake in. SoFi and Plug seem most appealing to me as far as these contracts go. And that would be, for me, buying 2 contracts at least, so then I could, trim at, 2x if that were to happen. And then, just play with house money for the remainder of it to see if that can, really go up, a lot higher, make a lot of, not just a 2x, but maybe a 3 or 4x on that. So I'd be intrigued. I am intrigued by that one. And and then I just pick up more shares there. So I just think that's super cool. I'm really excited. And maybe then I would want to sell a cash secured put to pick up 100 shares at or below $6 per share. But as of right now, I don't have that much on the side of my account, so I wouldn't be able to do, a $600 order there. But, just to be accumulating more there and capitalize on the options. So I'm stoked about that. I think that's really cool. So yeah, I hope you guys are too. But I think people in the SoFi community are going to hate me though. But yeah, I got to do videos on all of these, options, stuff that I'm seeing in Unusual Whales, because I just think that there's a lot of exciting stuff going on. I need to do too many videos tonight effectively. But, that's why there's a benefit of being a member is you get, this stuff before everybody else. So I think it's pretty cool. I think it's well worth the 99 cents a month because I'm going over data that I pay $48 a month for. So, and doing the research and laying it out for you guys. So I think it's I think 99 cents is totally worth it. But yeah, I mean, share with your friends, share with people that it's worth it. And if you guys ever want to tip me, a better way to tip me is to gift people memberships. Because then, I see the benefit of that, and then other people get the benefit of the membership. So it's kind of a win-win. The community wins, the channel wins, so all good there. But anyways, I need to continue on with this video. It's now an hour and 19 minutes long. But so the next one on here is Tilray. I have to say with Tilray, I was, last week I had, this cash secured put should be moved up there. Sorry, it's a little bit off. But, I sold the majority of my Tilray position, which I believe was 41 shares or 40 shares, something like that. I believe 40 shares when price was hanging out around $2 because I thought that it was going to come lower. I left one share for some reason. I just, I'll at least hold that because I'm cheap and I do positions in 1 share increments, in case I'm wrong and price continues to go higher. So I'm still holding a share, average around 181. But if I look at the Tilray chart, I just started to see big wick up here, followed by the next day, big wick up. And then I'm thinking, oh, well, I should just cash out. And so I sold the majority of my position at 202, and that being really just coincidentally at the 236. I was just noticing on August 1st, so on Thursday, that, hey, there could be some topping signals here with these big wicks to the upside. I should just get out of my position because I didn't do that with ChargePoint. I didn't trim when it was above my average. And so now I've got, over 1,000 shares of ChargePoint and, I'm back in the red. I didn't want that to happen with Tilray, even though it's a small position. It's just another one that I'd be holding the bag on. And I guess I'm technically not now because my average is like 181. But I have seen in the past many a times 170 being a pretty interesting level. And so I had placed it last week. I had placed a limit order to sell a cash secured put with a strike of $2, but a premium or limit order at 30 cents. So that put my average price at 170. But, I decided I'm going to scratch that. And so I don't have that placed for this week. And the reason for that is, I don't want to be spreading myself too thin. And so, and looking at the Unusual Whales options activity, there's one contract that stood out. This is, expiring in 2026. It's a call, but apparently it was a sell because it was bearish. And, since that's so far in the future, kind of, making me yawn. And so I just think, this is probably too speculative. So I should maybe just wait to see if it comes down to 170 or if it comes below my average. Then I would start to, add 1 share at a time. And I do have an average. Now I still have 1 share at 181. And so maybe I'd start to accumulate that again, but not going all in with a cash secured put of 100 shares. But, I'll reevaluate if price does come down more, as things do seem like they might be bearish. But that's, going up to $3. With it at 180. So maybe there's something there, but I'm probably taking a step back from Tilray because I think looking at the chart, this could definitely be coming down to my average right around here, maybe finding support there, and maybe that is when I would want to buy 100 shares to then sell covered call. If it does go up, then I secure money, some profits, a small profit from that. But if it goes lower, it's a small position still, so it's not a big deal. And 170, keeping my eye on that. And then so Tesla is the next one on the list here. I've placed an order last week. Is this above Ed's head? Yes, so you can see it. This is at a strike of 185. I still have that order placed, and I feel a little bit better about it because there is this call that was a strike of 215 that was sold, it looks like, expiration of August 16th. And, Tesla contracts are so expensive, $640 per contract, but that was sold. And so, or it indicates that it was sold because it was on the bid side. And so that makes me feel better about this 185 order filling. Just one share, but that would get me to be a Tesla shareholder. I'd be excited about that. And so, yeah, I need to pull up Tesla. I got it up here. And so looking at the chart here for Tesla, why did I pick 185? That is the 65% retracement, which is the base of the golden pocket here. Also, that does seem to coincide with, nearly getting a kiss of the wick here, nearly getting up to that level, a lot of consolidation below that. So I could see price dipping down to 185, that order filling, before it starts to go higher. 215 is, above current price. But that expiration is coming up, not this Friday, but next Friday. So it was probably wise for them to sell that if they think that price is going to be coming lower, i.e. coming into, 185, my order get filled. So I'm excited about that. And so if I look at the options table for Tesla, looking at calls and the one for the expiration for the 16th, August 16th, as that is what they sold. And that was at an average fill of 640. So let's see, and that was a strike of 215. So lots of options here, 215, 640. So they sold it at that price. So they're saying that, price, they expect it to come down lower. And so, yeah, I'm just going to wait for that order to be filled. I'm not messing with contracts with Tesla because I don't have enough money to do that. I'm not a big enough fish to do that. But I am a smart enough fish to pay attention to unusual whale options activity. And that is exactly what I'm doing here, waiting for, my order to fill at 185, not pushing it up to 190, which would be the 618. I'm just going to keep it there at 185. Maybe I reevaluate later in the week, but I'm just chilling with that. I'm excited for that to fill. If it does fill, and if not, I'm just chilling. But then, the next one on my list, I believe, is going to be Unity Software. I believe they have earnings this week, and it does look like there's some bearish sentiment around that. And so I might actually want to adjust this to $14, or maybe not even place a buy order this week. But maybe I do, because earnings coming up on the 8th, which is Thursday, won't be able to stream them. I'm not heavily invested in this enough, and I don't know the community well enough to gauge whether or not people would be tuning in if I stream their earnings. So not going to stream that. But, with the low of 1448, I think that's probably why I was picking 1450. But maybe, right here where the cursor is, that's still within that downtrending channel, and that's at like 1250. So maybe I want to do that at 1250. So maybe I'll note that Unity Software at 1250. And maybe that would be like an additional level to add another share if it goes down there. But for the time being, I'll probably just leave it at 1450. I only have 2 shares right now, so nothing too crazy with that one. But looking at the unusual whales options activity for that one, that's a call expiring at the end of the month. So I'll pull up the options table, pull up calls, and the end of the month is August 20th. And so that strike was 1550. It looks like they sold. So 1550, they sold at 169, as we can see here. Is this behind me? Oh, no, the cursor is just pretty small. But yeah, 169. And so currently that is worth to sell 163. So right now they made, $6 per contract. So, perhaps that's a good move. Perhaps price is going to go a lot lower. And so, with that being said, this order might be filled, and then maybe 1250 further, and just getting that average down closer to the base of this channel. And then, my thesis remains the same, that there'd be a bounce at least up to the midpoint, and that's about 100% swing. Or, maybe it's just, coming up to that 786, and that would be $22, so around 88. But if we do hit a lower low, that Fibonacci retracement does need to be adjusted, because price has gone lower. Or actually, that's not a retracement. That's an extension from over here. I believe I did that for this stream, or for this video, to suggest that maybe we're at support. But if we do break lower, maybe it's a fake out break. Order fill 1450, bounce up. So, I don't know. my play is still, or my yeah, the game plan that I have is still in effect. Moving at least to this midpoint. Or maybe I don't want to, and I get anxious and I sell at 18. I take a little bit of profit there. So, anyways, Unity Software. And so last week I did add a share. Forgot to mention it. Did add a share at $15 a share, and my average, I believe, is $15.35. I think just 2 shares, and that's because I had previously bought one share at $15.69, I believe. But then looking at the next ticker on the list is VLD, Velo 3D. That's the bottom of my list here for the shares or the stocks. And then I will look at some ETFs in just a minute. But this one, I've just been adding a little bit, 1 share or 2 shares sometimes every day after the close. But it's just, totally faded. It's broken this downtrend. Maybe we see some up moves, but maybe not. It does look like they have earnings, or when is this? On the 8th. It's not on the chart, but hopefully that there's a positive response to earnings, because my average is around $4 or above $4 a share. I kind of just want to get out of this stock. But I'm just, doing the dollar cost average strategy of getting it down. Eventually it will be lower, and I do think there could be a bounce. And so my buy level for this week is, really just $2 a share. Last week it was $2.75. Clearly that was filled. But with price hitting a low on Friday of $2.10, and that being the 52-week low, I could see it coming down to $2 around earnings, and then maybe bouncing, and so capitalizing on that. So that could be a really nice level to accumulate, maybe a little bit more aggressive, get the average down, and then take profits or trim at break even. I don't know, just exit the position. Options activity for Velo 3D is pretty boring. They're monthly contracts, and I believe in $2.50 increments, if I'm not mistaken. Yeah, so just super boring. So, I don't like the stock because of that. Company, very intrigued by it, but as far as the stock goes, I don't like it. I'm sorry. So I want to get out of my position. And maybe, get my average down to like 320. It bumps its head at this trend line, exit there. So, that's kind of my strategy with Velo 3D is GTFO, man. I'm sorry. But then continuing on down with the list, starting to get into the commodities or the ETFs. So BOIL, I did kind of break a rule last week with BOIL. I did have, let's see, I'm just going to move Ed for this last bit. So for BOIL here, I did have my order filled at $9 a share. But then there's something that I did that I'm kind of proud of. I was looking at the chart here. I'm going to pull up the natural gas tickers over here. And so looking at a BOIL chart, let's see, the low here, clearly broke below $9 a share. Let's see, on Thursday, on August 1st. So that, let's say that order was filled. I don't know the exact order fill date, but then I saw, this wicking down, and I was thinking, hey man, that's at this trend line. That trend line from here, I mean, this is an ETF that's leveraged, that tracks natural gas, so it's a little hand wavy. But, I was thinking, hey, there's a trend line there. Maybe it respects that trend line. Maybe we're seeing a wick below, and maybe that's a good dip buying opportunity. So I added another share at $8.50. Nothing crazy. I'm not a big fish, as I always say. But, that order was filled. $8.50. Could have had it filled at $8.31, but $8.30 wouldn't have been filled. Maybe $8.31 wouldn't have been filled. $8.35 for sure would have been. It can always, never buy the exact bottom. And so that is basically what I did. And, but then with this always bleeding more than I expect, that's why, my next buy level would be $8 a share. So, just chilling, and maybe I'd exit my position this week if it does go above my average, because I tend to not exit. I could have, made some profit, taken some profit, I believe, over here, or let's see, the highs. I could have taken profit on multiple occasions, made a buck or two, but I didn't. And so yeah, I'm going to be kind of like passive with BOIL this week. And as far as the unusual whales options activity, I didn't really see too much anything standing out with BOIL, but I did with KOLD, and that is the 2x leverage short natural gas ETF. Oh, actually, I didn't see anything with KOLD. And so this level here, it's the exact same what I had in the previous week. And so that's why this table's kind of cut off, because everything else moving down here is the exact same. And these are just levels that stand out to me. I don't have any orders placed on them. And so what I should do is actually try to move this up and over now, so I'm not blocking anything there, and I can bring Ed back so he's not blocking anything. And so with KOLD, that is the short ETF on natural gas, my buy level, or consider buy level, would be $54 a share. And so if I do flip over to the KOLD chart, that is going to be just based on this, pivot high being right around $54. I have it marked at $53.95, which was the high on May 30th. And then we did get a pierce of that level the following day on May 31st. And so that, potentially there's some support there. So that's why I have that highlighted. Not going to dive into the natural gas chart here. I just kind of wanted to casually brush over that. Maybe, we start to see a pullback in natural gas. Maybe that would be my buy level. It does look like there could be a topping signal there with that big wick up, and with BOIL, wick down, but I could see it, potentially bouncing and, coming back to, well, I don't think it would be coming back to this M. I do think it could be coming back to around $13, maybe 12. And, finding this as resistance. So that is what I would be looking for BOIL. But again, it's a small position and really just me kind of having fun with fun with natural gas. I enjoy it, but it's also very risky. So the next ETF is going to be the short semiconductor ETF. And the price that I had for, an ad level is $22.69. So let's look over at the chart for the semiconductors. SOXS right here. That is going to be, I think that this could go higher. Or I hope it could go higher. My average is around $35. The reason why I have it at $22.69 is because there's this gap fill here at $22.61. So that's why I have that as like the ad level. There is the gap here from Thursday, so that is a closing price of $22.46. So maybe that is the dip buy level. But for me, I'm just going to kind of chill. I should have been more aggressive, at least doing weekly buys down here to get my average lower. I'd, be in the money right now potentially, but now it's like a little bit higher. And so looking at the options activity for this, there's actually some bullish sentiment around it. As far as I understand, that is a call expiring this coming week on the 9th. With a strike of $33. So if I do look over at the options table calls for this week, $33. Let's see, for buying that, $345. Let's see, 8, 9. This must have been filled earlier because $33 call, 45 cents. That's definitely gone up. Maybe there's a typo there, quite possible. Or maybe it was a put and I did a typo there. No, that would be a call. So yeah, I don't know. Maybe there's a mistake there. But that suggests bullish sentiment. But maybe that bullish sentiment is kind of played out because if that premium was 45 cents, it's now $3.45. So clearly money made there. But it's probably a typo in some way, shape, or form. Or it was an order that was placed maybe on August 1st before this big move to the upside, that gap up. So take that with a grain of salt. But yeah, I would probably want to exit my position around $35. My average is a little bit lower. And then that would be to, start adding back at this gap fill here. If I do exit, or if I don't exit, be patient, wait for this gap fill. And then so the next ones on the list, I'm going to try to go through these a little bit quicker. These are getting into the stock market indexes, all going short. So this one is the SH, which is the short S&P 500 with no leverage. My level for that is really, just a pullback to 1127, that being the gap fill here. And so my order would be 1130, just being a little bit above that. Nothing much going on with unusual whales options activity, just because, this one's actually pretty boring. I'd like to get out of my position and just focus more on the leveraged ones, but it is what it is. SPXU, we do have some options activity with that. This, I believe, is 3x leveraged short the S&P 500, and that we can see big wick up does suggest that there will be, a pullback. And so with that being said, the semiconductors being correlated with the S&P 500, I probably want to be placing a sell order to get rid of my position at 35. If it does hit that, maybe in the pre-market, that'd be a nice exit for me. And then I'd have a bunch of capital on the side to play with these other options. And then so this 2769, why do I have that? Same basically as the other ones. There's a gap down here. Actually, it does look like it was filled though, but because this was leveraged, it corresponds with the same candle, and that I guess that was filled. So maybe there's this other gap down here. I don't know. It's a compromise. But yeah, I mean, that was actually, since it was the level I'd highlighted in the previous week, it's not over here, but I didn't change them. 1130, that would have been filled as a nice dip buy for the SH. But for thinking about the SPXU 2769, again, that would have been filled. And so maybe I want to adjust those to be this gap, but I'm not being too aggressive with them. Really, I just kind of want to get out of my position so I can get lower on a pullback, because the sentiment actually for the SPXU that is bullish. But let's look at the fill price for that. And so that is for the 23rd for the month, and that is a call at a strike of 32. Actually, sorry, not that week. It's for the week expiring August 23rd. Calls looking at 32.50, and so the buy price was 160, and we're looking at that being actually at a price of 32.50, 147. So maybe there is still some, more upside for the SPXU, which would translate to downside for the S&P 500. But kind of contrary to that, I see some bearish signals from the SQQQ, which is the 3x leverage short Nasdaq. And so that level has not been filled yet, unlike the S&P 500. That is going to be around 818. I probably have it marked at 820, just rounding that up to the nearest 10 cents. And so maybe we're getting rejected up here, pullback. I don't plan on adding to my positions or anything. But if it does pull back, or if it does go up a little bit higher, maybe I'd want to exit my positions if I get in the money with it. Don't have a ton of shares, either the SQQQ or the SPXU, but it'd be nice to offload shares so I could add back on pullbacks. Because I think, the pullback that we saw in the market, this move up, I think we're going to be seeing dead cat bounces. We're going to be seeing the S&P 500 or the SQQQ here, or, the QQQ, the 3Qs, triple Qs, however people say it. This was a dead cat bounce here on the SPY. I think that we might see another dead cat bounce. That'd be a dip buying opportunity for short positions, and then it continues lower. And so, I could look at this, same type of thing with the Nasdaq here, the QQQ. But with the SQQQ, could be pulling back to 818, maybe that's a dip buying level. That's why I have that here. And this does look bearish here that's just this coming week, expiring on the 9th. So maybe like over the course of the next week, bearish moves for these ETFs. But over the course of the month, maybe we see some bullish activity. So something to consider there. But this is a call for the SQQQ expiring this coming week. And that is at a strike of 950. And that was a sell, as far as I understand, because it was a bid price, bearish there, 77 cents. Right now, 69 cents. So there was, some gains or some losses avoided on that. So, hopefully that was helpful. But yeah, I mean, this video is, over an hour and 40 minutes long. So hopefully it was helpful. And I have to say that I'm really excited about the plug power chart. I am really excited about the SoFi chart. I think that those are going to be really exciting as far as unusual whales, taking some options plays this week. But I don't have those orders placed yet. I'm going to kind of evaluate them based on the pre-market. But if you did enjoy this, if you do enjoy these members only videos that I make with all the timestamps and whatnot, please make sure you share, and also let me know that you do enjoy the content, whether that's by giving it a thumbs up or by letting me know in the comments down below. Thank you so much for being members, and thank you so much for subscribing to the channel. I really do appreciate it, and I hope you guys have a wonderful, wonderful, profitable week coming up, trading starting on August 5th, ending on August 9th. Thank you so much for watching, and take care, you guys.